This is Nightly Business Report with Tyler Matheson and Susie Guerin.
No change. The Federal Reserve leaves interest rates where they are and stocks move higher.
Coming up short, Oracle and FedEx, two corporate bellwethers, report disappointing earnings. We'll ask Goldman Sachs' chief economist what the numbers say about the economy.
And hot houses. More good news on housing sends home building stocks higher. We'll look at whether there's a thaw in the mortgage market as we continue our spring guide to housing. All that and more ahead on Nightly Business Report. So, Tyler, all about the Federal Reserve, the economy, and earnings. Those were the headlines today.
And Cyprus in there for good measure. It was a very busy news day, and we're here to tell you all about it. The Federal Reserve did it again, says it's going to keep interest rates right where they are, near 0% at the short end. And it also says it's going to keep up its bond buying program in order to hold down longer-term rates. The markets liked what they heard from the Fed, along with a pledge from the new head of Japan's central bank about its own bold easing measures to be unveiled on Thursday. As a result, stocks moved higher hereabouts, the Dow touching an all-time intraday high before easing back. Nevertheless, the blue chips did close 56 points higher to end at 14,511. NASDAQ up by 25, and the S&P 500 rose for the first time in 4 sessions, adding 10 points and taking us to within a few of an all-time high. Steve Leisman tells us where we go from here.
The Federal Reserve voting 11-1 to keep its policy in place of purchasing $85 billion a month in treasuries and mortgage-backed securities in an effort to drive down long-term interest rates and kickstart economic growth in the United States. But the Federal Reserve Chairman Ben Bernanke, in the press conference after the statement came out, suggesting that the Fed may in fact reduce the amount of monthly purchases if he sees sustained improvement in the economy. And specifically, when asked, he said he's looking for sustained improvement in the job market.
We are seeing improvement. I think one thing we would need is to make sure that this is not a temporary improvement. So we've seen periods before where we had as many as 300,000 jobs for a couple of months, and then things weakened again. So I think an important criterion would be not just the improvement that we've seen, but is it going to be sustained for a number of months?
Significantly, to go along with that, the Federal Reserve did reduce its outlook for unemployment in the United States. The Fed saying that it sees unemployment falling to 6.85% in 2014. That's the first time since the Fed has been forecasting and making those forecasts public that it's been below 7%. A quicker pace of improvement in the unemployment rate could bring a nearer end to the Fed's efforts to stimulate the economy. And the Fed chairman as well, for the first time, made remarks about what's going on in Cyprus and the economic and financial difficulties in that small country.
So there are a lot of uncertainties and difficulties, and there's questions about how the way Cyprus is treated, what implications that might have for other countries and the like. So it does have some consequence. But having said that, the vote failed and the markets are up today, and I don't think that the impact has been enormous.
Finally, the Federal Reserve, in its statement for the first time, made mention of fiscal restraint, which is another way of saying the sequestration that many analysts thought the Fed did not think was going to happen. And Fed Chairman Ben Bernanke in the press conference did say that he has concerns that reducing federal spending could reduce economic growth. Back to you guys.
That's Steve Leisman reporting from Washington. Well, two big companies that could be considered bellwethers to the economy had two big misses today. Oracle, the world's third largest software maker, came in shy of Wall Street's earnings and revenue targets as new software sales fell. On the numbers, Oracle shares took a big hit after hours. And the other miss, FedEx, the company reported weakness in international markets as well as customers choosing cheaper, slower delivery options. FedEx shares off nearly 7% on the news. With us now, more analysis of the Fed decision and on the outlook for the economy, especially in light of those numbers from Oracle and FedEx. Jan Hatzius, chief economist at Goldman Sachs. Jan, let me just ask you, between those FedEx numbers and what Federal Reserve Chairman Ben Bernanke said today about the economy, that there are still downside risks to the economy, do you think Fed policies made the right move today, made the right decision? What do you think?
I think so. I think in general, the moves that we've seen over the past 6 months have been quite helpful. The further move in the direction of trying to get the economy back onto a stronger trajectory for the labor market, more rapid labor market improvement, I think the message from what they did today is, for the time being, stay the course. Of course, he's not willing to commit what's going to happen in the future as far as the quantitative easing program is concerned. So there's still quite a lot of uncertainty around how long that's going to continue for. But our expectation is that it's still going to continue through this year. Then we'll wind down in 2014. We do expect still quite a supportive Federal Reserve.
And that, Jan, is what I wanted to ask you about. Did you divine any hints in either the press conference or the statement today about when the Federal Reserve might take its foot off the gas pedal and begin to taper off those $85 billion a month of bond purchases?
I don't think there was a strong signal. I mean, he was obviously asked several times to opine on that, and he didn't really provide a lot of additional information. I think if the economy continues to add, the sort of job growth that we've seen in the last report, then probably they would taper earlier than in our forecast. But we would expect them to keep going for longer, because we don't expect that pace of job growth in the light of the slowdown that we're likely to see from the tightening of fiscal policy that they also refer to. So, it does depend on the economic outlook a lot. They will be responsive to economic conditions and the pace of job and GDP growth. But I don't think he really volunteered a lot of additional information here.
Jan, bring this home to our viewers. I mean, what is the message of the Fed today and what it means for home buyers, business owners, home sellers, investors?
So I think the broad message is that the Fed's view is that they're still failing on the employment side of the mandate in terms of the level of employment and the level of the unemployment rate. And they want to get back to full employment more quickly. So they will be supportive as far as housing as one important sector in the economy is concerned, as business investment and business spending is concerned. So I think it's a broadly supportive message. They're also saying that they're not particularly concerned about near-term inflation pressures. That will come again further down the road, but they're not expecting it in the short term. And I would agree with that.
We'll continue to monitor it with you. Thank you so much. Jan Hatzius, Chief Economist at Goldman Sachs. Tyler.
And now to the latest on the financial crisis in Cyprus. All banks there will remain closed until at least next Tuesday. Michelle Caruso-Cabrera is on the ground in Nicosia, Cyprus, with the latest efforts to avert the threat of a banking system collapse. So, Michelle, the first question obviously is, why are the banks still closed and why won't they open before Tuesday?
Well, the reason they're still closed is they're afraid if they reopen them, there will be terrible runs on the banks and the banks will collapse because everyone will try to take their money out. What they're going to do is they're going to extend a banking holiday through the weekend. That's going to give the government, they hope, time to come up with some kind of plan to recapitalize the banks. That's a long-winded way to say fix the banks, pour a lot more money into them so they are stronger. Not until Tuesday, because Monday happens to be a holiday here. So it gives the government a lot of breathing room, Tyler.
Michelle, this is Susie. What do you think could happen on Tuesday? I mean, there's been so much pent-up anxiety over this whole crisis. What happens when those banks open?
Well, it all depends on what happens in the next 4 days. So Cyprus rejected the first idea, which was to tax deposits. Then they tried to perhaps raid a pension fund to come up with money that they need in order to meet the requirements of a bailout from their European partners. Now that all those things have happened, they face two choices. They need to shut down some banks that are very, very weak, or they're going to have to leave the euro. That's the choice they face. And depending on that, which one they make, that's what's going to happen on Tuesday.
Michelle, how did the banks in Cyprus get so bloody big? Is it really traceable basically to the fact that it's a kind of don't ask, don't tell kind of banking culture?
Well, certainly this is a place that advertised discretion and what they call tax optimization. And they did have lower corporate tax rates. So there are legitimate reasons to put your money here. But also, previous governments and the current one, they very much wanted to be an international financial center. They worked very hard to attract capital from all over the world. It is the business model of this country. But it's not going to be for very long. They just can't do it anymore. One statistic to leave you with. The banking system is so much larger than its economy here in Cyprus that if we wanted to have a banking system in the United States that was as large, equivalent to our economy, we would need 45 more JPMorgans. That's how much bigger we would have to get to match the size that they've done here relative to the size of this place.
Michelle Caruso-Cabrera reporting from Nicosia tonight. Thank you very much. Well, a big bipartisan vote at the Capitol. The Senate overwhelmingly passed a massive stopgap spending bill that will keep Washington up and running through the end of September, but leaves billions in automatic federal spending cuts in place. But that could mean job furloughs for hundreds of thousands of federal workers between now and that point. The measure moves now to the House on Thursday, where it is expected to pass.
America's biggest bank has had a bad year, a huge trading loss, a congressional scolding, and today comes news of a more than $500 million settlement related to the bankruptcy of MF Financial. Kayla Tausche has more on the tough times at JPMorgan.
It's big, and so is the target on JPMorgan's back. Just this week, mortgage giant Freddie Mac named JPMorgan in a lawsuit. The charge that it helped manipulate interest rates, which Freddie Mac says cost it billions.
I simply do not know where the money is.
MF Global, the firm John Corzine ran into bankruptcy, settling with the bank, making it pony up $100 million amid criticism it withheld emergency cash as the brokerage teetered on the edge of collapse. If that wasn't enough, the bank has also come under fire for assisting harmful payday lenders, sometimes charging customers wild interest rates upwards of 500%. Also in focus, foreclosing on homes of members of the military while they're on active duty. The costs are starting to add up. CEO Jamie Dimon saw his pay slashed in half in January, and the bank disclosed 17,000 layoffs in February. The floodgate of bad news first opened last year when JPMorgan's European arm made a giant trade on the global economy. Dubbed the London whale for its sheer size, the trade was foolhardy and cost the bank $6 billion.
The rules need to be revamped.
Grilled over that very trade last week on Capitol Hill, Senator Carl Levin took executives and the bank's regulators to task for letting the situation go awry.
The OCC has issued a cease and desist order, but I believe that, Mr. Curry, you and your colleagues have a challenge to get America's biggest bank back on the straight and narrow.
For now, JPMorgan is taking strides to right its wrongs. When Dimon discovered the payday practices, he called them horrible. The bank on Wednesday announced new rules to reform them. Though suffering a bit of tarnish, JPMorgan's sterling reputation is not in long-term jeopardy. Even amid the missteps, the bank's posted record profits. Its stock up 50% from last summer. For Nightly Business Report, I'm Kayla Tausche.
Meantime, banks are gearing up for a busy spring real estate season, but today the Mortgage Bankers Association reports that applications for home mortgages dipped more than 7% last week. The main reason? Rising interest rates, which did climb to a 7-month high, but they're still pretty low. Lenders have been making more loans lately, even the kinds of loans we haven't seen in some time. Coming up, Diana Olick reports on why lenders are loosening up in the second part of our series on housing, the credit thaw.
Well, another industry on the rise, airlines. It expects its profits to climb higher. The International Air Transport Association says the world's airlines will make $2 billion more this year than previously forecast, and that's on growing confidence in the global economy and a boost in cargo shipments. Meanwhile, some of the biggest U.S. carriers have found new ways to squeeze out higher profits by offering fewer seats but focusing on high-end flyers. Phil LeBeau explains.
Hi, Susie. This is all about the airlines getting more out of those very lucrative business class seats. And the reason why is because when you look at these transcontinental flights, whether it's from San Francisco or Los Angeles to New York or Boston and Washington, D.C., on average, the fares are about 50% higher than on coach fares, and this represents about 11% of the seats on those transcontinental routes. This week, United Airlines started changing out the business class on some of those transcontinental flights, putting in lie-flat business class seats. There will be fewer in business class. And by the way, the question becomes, why are they doing this? It's all about selling a higher percentage of business class seats on these flights. In other words, having fewer that are unsold or could be open for upgrades with frequent flyers. And what United has started, we're seeing now with other airlines following. Later this month, we'll see the same from Delta. Later this year, American will follow. And then you have JetBlue today announcing that it will upgrade its transcontinental service with premium service next year. What do frequent flyers think about all this? Generally speaking, they like it.
It's great because a lot of times you have very, very long days. You can get rested up on those flights.
I think it's nice if you can get the upgrade, but for most people, it's going to be tougher with the airlines consolidating.
And it will be tougher because there will be fewer seats in business class once these conversions take place. The airline index today hit a 6-year high, and it's up 51% this year. Susie, we saw something rare in the first quarter with the airlines reporting a profit. Expect that to be continued in the second quarter. Susie, back to you.
Well, it's really, those seats look real comfy in business class. But what can we expect on some of the shorter flights around the U.S.? Will we be seeing any of these kinds of services being offered?
Susie, it was a little hard to hear with our IFB, but I think what you're asking is, will we see this with other routes, certainly in the domestic area, other than the transcontinental flights? And the answer is probably not. For the most part, what we can expect is that it's the longer flights where they can get the people to pay for those seats, those higher priced seats. And you're not going to see this on a flight from, say, New York to Chicago or Los Angeles to Denver or to Dallas. It's likely not going to happen.
All right. Thanks a lot, Phil. Phil reporting from Chicago. And coming up, so how do they really feel? Some of the country's lowest paid workers weigh in about their jobs and their future. Now let's take a look at some more big winners on the S&P, including First Solar, Dollar General, and Best Buy, as you see there. And on the losing end, Cintas, Occidental Petroleum, and Windstream. And also here's a look at how the international markets closed today.
In our market focus tonight, machinery companies Caterpillar and Deere both hitting some rocks in the road. Cat reporting weakening sales in Asia down 26% and North America down 12% in the 3 months through February. Caterpillar was the biggest drag on the Dow, down 1.5% today, as you see. Deere was cut by Wells Fargo from market perform to underperform because Wells expects demand for farm equipment to weaken. Deere shares off more than 3% today to 87.74. Anadarko and ConocoPhillips announced a big oil find in an area considered to be one of the last places for undiscovered oil deposits in the Gulf of Mexico. Anadarko spiking early was up 3.75% to close at $86.40. Its partner ConocoPhillips up as well, rising almost 2% to $60.44.
General Mills feeling its Cheerios this morning. It reported earnings above analyst estimates, and it also raised its yearly forecast, saying the business environment is improving. Shares of General Mills rose more than 2.5% to $47.61. And a big jump in shares of BlackBerry thanks to a Morgan Stanley upgrade from underweight to overweight. Morgan Stanley saying now there may be room in the smartphone market that's dominated by Android and the iPhone operating system for BlackBerry. The vote of confidence comes just 2 days before BlackBerry's Make or Break Z10 goes on sale at AT&T stores. Looking at the stock, BlackBerry rose $16. That's a gain of almost 6.5%.
And Susie, one of the roadblocks to the housing recovery has been tight mortgage credit. Rates may be low, but they're only good if you can get them. As we continue our look at the spring buying season, Diana Olick tells us how lenders are starting to ease up, not so much on their standards, but on the types of loans they can offer.
After being turned down for a mortgage last year, Leah Harris has been renting in Washington, D.C. Now she is finally moving into a home of her own.
I tried last year at about the exact same time, and nothing was different than it is now. Same income, same assets, pretty much everything was identical.
In time for spring, mortgage credit is beginning to thaw, specifically the return of the low down payment loan. Since the housing crash, 20% down was the rule, with FHA, the government's mortgage insurer, the only exception.
I think a lot of it has to do with the individual banks that have different underwriting standards. Fannie and Freddie have their traditional guidelines, and if you underwrite to those guidelines, many of the people are qualified today.
Government-backed Fannie Mae says it has not eased its underwriting, but is now buying more home purchase loans with between 3 and 10% down. Why? FHA loans are getting more expensive. Facing a $16 billion shortfall, FHA raised its insurance premiums. Fannie Mae does require private mortgage insurance on low down payment loans, but it is often cheaper than FHA. Meanwhile, as home prices rise, the private mortgage insurers, hard hit by the housing crash, are easing some standards.
It's not about the down payment. It's about making sure that the borrower has the ability to pay the mortgage after it's made.
Also fueling more loans are more home buyers, especially first-time home buyers who need that low down payment mortgage. Until now, they've been largely sidelined by either tight or pricey credit.
The low down payments are necessary for the first-time buyers so we can have the second-time buyers moving up, moving up, moving up.
Banks are also easing up because as mortgage rates rise, their refinance business is drying up, putting the focus back on home buyers. For Nightly Business Report, I'm Diana Olick in Washington.
And coming up, chicken wings and basketball, a winning combination. Coming up, the CEO of Buffalo Wild Wings weighs in on the impact of the NCAA tournament has on business. But first, here's a look at how treasuries, currencies, and metals close today.
A new survey of lower-wage American workers, those taking home $35,000 a year or less, finds, perhaps not surprisingly, that they're the most pessimistic about job security, future career prospects, and their personal finances. Two-thirds say they see little or no opportunity for advancement at their current jobs. And half say they're not confident that those jobs would help them achieve their long-term goals. 65% of the jobs added to the U.S. economy since the recession officially ended have been lower-wage positions.
Well, March Madness is back. Tomorrow, the field of 64 teams will tip off the men's NCAA basketball tournament, and fans around the country are gearing up, and so is Buffalo Wild Wings. In addition to the Super Bowl, the NCAA tournament means big business for this company. During last year's tournament, fans ate nearly, get this, 70 million Buffalo Wild Wings. And here to tell us more about all of that, Sally Smith. She's president and CEO of Buffalo Wild Wings. So, Sally, can you top 70 million Buffalo Wings?
I think we will this year. I think we have close to 100 more restaurants across the country that'll be showing the big games over this weekend and coming. So my guess is we'll go well past 70 million this year.
What are your favorite wings on your menu? I'm just curious. What do you like the most?
What do I like the most?
Yeah.
Well, I do like our spicy garlic wings.
Spicy garlic wings.
Spicy garlic. When they're done right, they're hot, steaming, just enough burn. You can dip those in a ranch or blue cheese and cuts the burn a little bit, but that's probably my favorite.
And you wash them down with a nice cold beverage of your choice, right?
Yes, you do.
Is there any truth to these stories that we heard last year about a shortage of wings?
We have faced very high wing prices this past year. I wouldn't say that there's a shortage. You just have to be willing to pay for them. It's something that we've managed over the 30 years we've been in business, is fluctuating wing prices. But we have great relationships with our suppliers, and they've told us and work with us to make sure that all of our restaurants have fresh wings in to serve those raving fans every day.
Sally, am I getting this wrong? But I thought I saw that the prices on wings have dropped sharply, something like 20%. If that's right, could that mean more business for you?
Well, it's really interesting. We have seen wings come off their high, which was January and February of this year as we approach Super Bowl, and they are down. I think that our fans come in. Luckily, we've been able to take just modest price increases, and we'll make up other ways to ensure that our prices, that there's still a great value for our fans. We think there's always a great reason to come into Buffalo Wild Wings, and certainly March Madness, you can't beat that. It is the busiest time, and our team members are ready. They love this time of year because there's so much competition and the guests, and it's really a great atmosphere.
Well, it really is the national sports event. I wonder how closely you do follow those input costs, like grain costs. You know, last summer there was all that concern about corn and feed costs, and that obviously is going to trickle through in the price of your ultimate commodity, which is chicken wings.
It does, and as I said, the traditional wings, they float with the market, so we do feel the input costs. Our other commodity basket, we enter into longer-term yearly contracts with our suppliers, and we try to moderate that a little bit, have some items on the menu.
Well, it looks like we lost Sally Smith. Just before I was going to ask her, Susie, who her pick was in the NCAA tournament. I believe the University of Minnesota, where they are based, is actually in the tournament.
She was saved by the bell.
She was saved by the bell. She didn't have to do it. Sometimes you lose the satellite in the middle of a feed like that. We apologize for that. Let's take a look at tomorrow. And we were just talking about crops and feed. We're going to get a report on spring weather and possible flood impact on crops as the planting season gets underway. Two closely watched housing reports come out tomorrow. The federal government's home price index and existing home sales for February. And the House of Representatives takes up that Senate bill that was passed today to fund the government through September.
And finally tonight, a fascinating story about a small ceramic bowl. You see it there. It was purchased for just $3 at a tag sale in New York State a few years ago. And it was on display in a family's living room. But then this week, it sold for more than $2.2 million at Sotheby's auction house. And it turns out it's a 1,000-year-old ding bowl from China's Song dynasty. And as far as anyone knows, there's only one other like it, Tyler, and it's in the British Museum. It's only 5 inches, but Tyler, since we're on a sports theme, it's a Super Bowl.
You could put some wings in that bowl, couldn't you? I'm going up to my attic tonight to see if I got anything. Susie, great to be with you again tonight. That'll do it for tonight's edition of Nightly Business Report. I'm Tyler Matheson. Thanks for watching.
I'm Susie Garib. Have a great evening. We'll see you right back here tomorrow night. I'm Susie Garib with a Nightly Business Report news brief. The Federal Reserve vowed to keep short-term interest rates at record low levels and keep buying $85 billion in bonds every single month to bring long-term rates even lower. That sent the markets higher, the Dow up 56 points, even topping its intraday high during the session. The Nasdaq was up 25. The S&P closed higher for the first time in 4 sessions, adding 10 points. Shares of FedEx fell nearly 7% today after lowering its earnings forecast because cash-strapped companies are choosing slower and cheaper options on shipping freight. And the Senate passed a spending bill to keep the federal government up and running through the end of September. The House is expected to pass the same measure on Thursday. Be sure to tune in to Nightly Business Report right here on your public television station.